All right. Hey there. What's going on, everybody? Chris Frakes with Texas West Capital. Welcome to Beards and Bitcoin. We're going to have 2/3 of the Beards here today. Tillman, it's the first day for his child to head to college today. So he's doing the dad thing and taking them in and I'll get them all set up. But I've got Andrew here. So this is good.
Yo.
You know, we always got a lot to say. And so today we're going to take a look at a few things, guys. You know, recently the NASDAQ wants to, put an application with the SEC to do options on the index, on the Bitcoin index. They got there. This is a big thing. We're going to talk about that today. Also, OpenSea received a Wells notice from the SEC that says, hey, we think your little tiny pictures are securities, and we're going to nail you to the wall, basically. So we'll talk about that and a few other things here today. So thanks for joining in. As always, glad to have you guys here. What's going on, Andrew?
I'm glad we're here to talk about the option stuff with the NASDAQ because, that will happen probably across several different exchanges, and it's a really big deal. It's not going to get the pub and the headlines that the actual spot Bitcoin ETFs did, but the reality is that over a longer timeline, it's going to have a meaningful effect long term because you're introducing additional layers of liquidity associated with Bitcoin as a meaningful financial asset. I like to remind everybody that, just about 45 days ago, Larry Fink was on CNBC and talked about his journey associated with Bitcoin and how he was kind of a denier 5 years ago, did some research 3 years ago, kind of, turned the page, thought it was, kind of digital gold and had some intrinsic value as an uncorrelated, potentially an uncorrelated asset. And then gotten to where he was now, where he, again, proclaimed it to be a legitimate and meaningful financial asset in today's markets. And so with that, what you're going to get is you're going to get all of the liquidity inducing sort of bolt-ons that exists for, indices like the S&P 500 or the Dow or the Russell or the NASDAQ or whatever it happens to be. And options markets are a big part of that. They inject liquidity into the price and the asset itself. They bring more eyeballs and more participants to the party. And it's a really, really big deal. I mean, it's not a stretch to say that the volumes associated with the options markets on certain assets at times are nearly as much or even more than the underlying asset itself. And that is, people don't understand that. When you think of options, just the word option in and of itself almost attempts to make the claim that, well, this is a smaller type of transaction associated with an asset. While in the aggregate, options markets are massive and huge.
Yeah, huge. Yeah.
And again, injecting, people at the party, eyeballs, and capital into the asset itself. So I've been waiting for the options thing to come to spot Bitcoin and even the Bitcoin ETFs to some extent because of what it would mean in terms of again, eyeballs and then liquidity and flow of capital. So really a big deal, something to really keep your eye on. And we've seen, after the halving, Bitcoin runs a pattern of there being a super cycle, associated with halving events and the period, the 4 years for each period. And this, these types of things will be a meaningful part of, over time, parabolic moves that we'll look back on and will be this small part of a chart, but it will be a 6 or 12-month period. You'd be like, whoa, man, that was fast. But we're in the moment. 6 months isn't fast to us, right?
Right, exactly.
As you think here now, but it when we look back at it, it will look like it and feel like it. But those days are coming, no doubt. Those days are coming. Just adding liquidity to the pool available to Bitcoin as an asset will absolutely eventually move the price higher.
Yeah. So, again, one of the, basically for those that are maybe just turning in for the first or second time to what we do here on the podcast, what we tend to look at is we give you a bigger understanding of what's going on with Bitcoin, right? So it's not just price itself, but it's what does Bitcoin mean? What does it, what is the potential future look like? What does it create in terms of financial products and whatnot? Because as we talk about here, we view Bitcoin as being this base layer as we continue to move into the future. And what does that mean? Well, again, that means we get things like options. That means we get things, in more complex financial instruments based on it, which is what they do with everything else out there. And the importance of this is the liquidity, right? It's not so much, okay, I'm going to buy Bitcoin because it's going to go up 10 times in the next year or two. That's not really what we're looking at. We're looking at, listen, I'm buying into Bitcoin because this is the beginning of something much bigger. And, investment wise, over time, you're going to see that return. But even beyond that, you're going to see the stability that it puts in as it becomes that base layer and the things that are built on it. And I think that's really kind of important because as Tillman, who's not here today, but like he likes to point out, up until this year, really, it's been seeds have been underground, the roots have been growing. This year with the ETF launch and all these things are starting to happen, this becomes okay, now we're above ground. And it becomes a different kind of situation than what you might have been used to if you've been in Bitcoin up till now. So it's really important to kind of understand how these things like the options coming in, how important that is, how much that liquidity it can inject into this whole system. Because at the end of the day, it's about, prior to this, we were like, listen, we want people to know about Bitcoin. But now you've got people knowing about it, and you've got big people with lots of money and history of building complex financial tools on top of things like this that have the attention there now. And so now they can get in there and kind of blow that up.
And those complex tools will benefit the institutions that they're created at, of course. But if you have an understanding or a little bit of history associated with traditional markets, there's a way to look at a residential mortgage on a home. Well, the fact of the matter is that there's an entire huge section of banks of any financial institution that create layers of different things associated with that asset, and then the return on that asset, like lots and lots of stuff. You can even be real simple about it. You can be a local bank, a local credit union that creates a mortgage, right? Well, even in that simplistic type of environment, even if they hold that mortgage, they are using that process to then create yield associated with savings and CDs that they also institute at their organization. So the fact of the matter is that Bitcoin has not found itself in that environment in the traditional sense up until now. There have been crypto organizations that have tried to create lending architecture associated with Bitcoin as an asset, and in general have failed because greed is a thing and people get outside of themselves and get overextended. And a good portion of those folks had never spent much time in traditional finance and having a background in what could go wrong. So having traditional players have, initially their hands on an asset like this, the right way to look at it. And there, again, there's a subsection of, still the cypherpunk movement, which, doesn't want TradFi to be involved at all with Bitcoin. We've crossed that proverbial Rubicon. So where do we stand now? The best case scenario for most people is to allow those institutions to do what it is that they're going to do with Bitcoin. At some point, there'll be meaningful lending options at these institutions if you hold a significant amount of Bitcoin. At some point, again, options. At some point, other processes associated with quote unquote leverage.
Yeah.
But if you're a Bitcoin holder who's holding spot Bitcoin in a cold storage wallet, you're benefiting from all of that stuff and all of that liquidity with less risk than all of those people are taking. So that's why, we get on this stream each week and we talk about the value and opportunity with Bitcoin, because options happen, continued adoption at wealth management organizations, which we'll talk about later. That will only push again the price higher. And if you're holding in a cold storage wallet a certain amount of Bitcoin, and you continue to participate in the fact that at some point in the near to mid future, Bitcoin will be above 100K. It just will. You're benefiting from all these processes, even though you may not agree with them. The great thing about Bitcoin versus fiat traditional markets is you can choose a different path, but still benefit from that other path that you're not choosing. From a price standpoint. Yeah. So, it's the best of both worlds in a lot of ways. A lot else to talk about. I would, I'd love to take a minute and talk about the fact that I couldn't have been more right about Ethereum ETFs. 45 days in, they've got 500 million in negative flows.
Yeah.
So, Grayscale and their ETH product absolutely destroying the class. And I haven't looked closely today, but the fact of the matter is, as of yesterday, since the July 23rd launch of the Ethereum ETFs, Ethereum is down 30%.
Yeah.
And so, for all the, crypto conversation about, Ethereum ETFs, and they're going to take up, 20, 30% of what Bitcoin, took. None of that is true. There are negative flows, which is a negative narrative to the people that they're trying to get to purchase spot Ethereum ETFs. Very, very difficult to tell the story. Internally, crypto folks were like, well, this is, the next version of the App Store, and that'll resonate with people. Nope, hasn't resonated. And so, you've just got it. You've got a problem with it. And Bitcoin is a brand, and that's the reason why Bitcoin ETFs have been wildly successful. Yeah. The most successful ETF launch in the history of BlackRock, which, by the way, invented ETFs.
Yeah, exactly. They're it.
Yeah, they invented ETFs, and their Bitcoin ETF is the most successful one they've ever done. And so, juxtapose that against Ethereum ETFs, which again, BlackRock has one and others have them. It has been a really, really difficult first 45 days. Again, because of the drag of outflows from Grayscale's product, and lack of interest. And think about this. So you can be sitting with a guy at Morgan Stanley who's got a $6 million account, and he lives in Columbus, Ohio. And he works with a group there of, like 3 financial advisors and 2 assistants. And, he sits down for his quarterly review. Having a conversation about, you need some exposure in this area. There's a Bitcoin ETF, but rather than an Ethereum ETF. That guy, 9 out of 10 of those guys are going to know the term and the brand Bitcoin. Oh, okay, yeah.
Yeah.
Bitcoin makes sense, and it's really done really well. And so yeah, let's put some money in there. Ethereum. There's probably a good chance, and I've not seen this talked about that much. There's not just one name for Ethereum, by the way. There's Ethereum, there's Ether, there's ETH, right? So
Yeah.
there's like 3 different names by which Ethereum even goes by out there. So that guy be like, well, Ethereum, what is that? What does that do? Like, okay, there's another one of those. What am I thinking there? What's Ethereum do? And I don't know what that advisor is even going to say. First of all, it's not necessarily widely available at those organizations right now. And then secondly, what's the narrative? Well, Ethereum's like, the internet and computers back in the 90s. I don't know. What are they saying? Very different from a quick and specific digital gold. This is digital gold, scarce digital gold, right? Easy. And so not a surprise that the Ethereum ETFs have struggled. Not necessarily a flop, but my thesis is short and midterm, Ethereum ETFs were going to have a really, really tough time because of the lack of a prevailing narrative, the lack of probably being known in traditional markets, in pop culture, not known in any way that we think. Listen, most of us on this call and listening to this are kind of crypto native, right? Like, of course, we've heard of Ethereum, but we're like 3% of the population, maybe.
Yeah, we're inside the walls, right?
Yeah, right. Like, this is our echo chamber. People outside of our echo chamber think Ethereum is some sort of strange ingredient at the bottom of a cereal box. They don't know what that means. Some kind of glyceride something. They just don't know. And so I put out a tweet yesterday and kind of looked at the issues with Ethereum ETFs and the numbers associated with them. Negative 500 million in flows in the first 45 days. And somebody responded and said, yeah, look at the Google search / name recognition of Bitcoin versus Ethereum over the past, 5 years. Or I don't know what it was. I didn't look closely enough, but it was truly dramatic. You had, Bitcoin way up here, peaks and some valleys, but you had Ethereum at like just really nothing. Yeah. And that's kind of the whole point, is that how do you create a narrative out of thin air? How do you get people that are a little concerned about a new category to jump in with both feet? And yeah, one of the ones that I don't understand, sure, I'll buy that one too. That most people are not. First of all, financial advisors are not trained that way to add additional risk to people's portfolios.
Exactly.
And then folks that folks. Most guys that are sitting down at those tables and have a $6 million portfolio are not 37 years old. They're just not. They're 67.
Yep.
And they have a particular track that they'd like that money to continue to exist for the next 30 years and pass it off to their heirs. Mm-hmm. And so they're going to be a little more risk averse. So even the Bitcoin ETF is a 1, a half or a 1% position in their portfolio right now. Ethereum doesn't move the needle, and so I'm not surprised that what my thoughts were about it have absolutely been the case.
Yeah, I think again, you bring back that we were talking about that back at the beginning of the summer, pretty much when we first launched the podcast here, and I think that was what we were kind of getting at, was the fact everybody's like, oh, but it's the same narrative, right? Even within crypto circles, it's like, oh, well, Bitcoin's this antiquated kind of dinosaur technology, everything else can do something better, faster, whatever. But it's about the fact that Bitcoin's been out there. Bitcoin is top of mind. Bitcoin network effects coming out, first one out, right? And like you pointed out, it's what people know. If you say crypto or something like that, if they even think of beyond the word crypto, it's going to be Bitcoin, right? If you say Bitcoin, people generally kind of understand it, or at least have heard about what you're talking about.
Have heard of it, yeah. It's a pop culture word. It's well known. People have heard it. They've heard it a bunch of times. Even if they're one of the 27 people that still watch CNBC, When they talk about this stuff, they talk about Ethereum, they talk about Bitcoin. They don't spend meaningful time talking about Ethereum. They just don't.
Yeah.
Well, why? Well, those organizations are there to keep eyeballs, not have eyeballs go to sleep and turn the channel, right? So they have data that says if we talk about crypto kind of beyond Bitcoin, people don't have meaningful interest, right?
Yeah.
They have the data that shows them that. So if you look closely enough, it wasn't that too difficult, a prediction to make. But again, living in our bubble that is crypto, we wanted the Ethereum ETFs to be awesome, and we would see 20% of the flows, blah blah blah. It's been negative 20%, and that's unfortunate. I'm not a hater, but I'm a realist.
The reality
And
of it, right?
yeah, and the real problem is not completely encompassed by, well, people don't know what Ethereum is. That's probably about 30% of the problem. The other 70% is Grayscale's trash. They had $11 billion of ETH, and they created a product and put a fee on it of 2.5%.
Yeah.
Their Grayscale Bitcoin fee, GBTC, is 1.5%, and that was insane at the time.
That was crazy. Yep.
They nearly doubled it with their ETH product. You have to be nuts to continue to leave your money in that product at 2.5%. Most hedge funds are no longer even 2 and 20. They were 2 and 20 for a long time. They're more like 1 and 10.
Yep.
If you're holding Grayscale's ETH product, you are paying bigger than hedge fund prices to hold that. Nobody's going to hold that product. They have had outflows every single day that product has been around. By the way, I took a look at GBTC too. They've only had 4 days of inflows into GBTC since it was turned into an ETF. We're like 9 months in, right? So every day, like clockwork, there's more outflows out of those products because their fees are astronomical. And again,
crazy.
That's a point of emphasis in the world of wealth management is fees, because they'll eat into your returns, especially over time, right?
Yep. Yep.
So no wealth manager who's worth a darn is going to look at somebody's portfolio and say, whoa, you got this product here that is charging you 1.5%, 2%. Well, that doesn't make any sense. We have 7 other products that'll charge you 14 basis points, 21 basis points, 10x less. Go into those, right? Just do it. So, it's interesting that even in a quiet, we wish Bitcoin would do something type of environment, Bitcoin dominance continues to rise.
Yeah, exactly. And real quick here before we go on, some people may not be up to an understanding of what you meant when you said 2 and 20 and 1 and 10 with the hedge funds. Could you explain that real quick?
Yeah. So hedge funds, the whole point of hedge funds is to create uncorrelated returns, meaning that you're not in the market. So everybody can buy an S&P 500 Vanguard fund and only look at it once a year. And over the past 25 years, it's effectively higher, right? Well, hedge funds are supposed to do a couple things. They're supposed to give you uncorrelated returns to that S&P 500 number, so higher generally, and not allow you to just ride the wave of the market, so you're getting less volatility as well. So you've got uncorrelated returns and less time, quote unquote, in the market. That's the whole point of a hedge fund. So for the privilege of less time in the market and better returns, you pay higher fees, right? So your typical Vanguard fee is like 10 basis points, which is 0.1%. A hedge fund's going to charge you 2% to keep your money there. And then however much money that hedge fund makes on behalf of clients, the hedge fund gets to keep 20% of those gains. So that's a big chunk, right?
Yeah.
So the $100 million hedge fund, by the way, there are very few hedge funds that are 100 million, it's a billion or whatever.
Yeah.
But I'm not super awesome at math, so let's stick with 100 million, right? So say they make, $10 million that year, right? The hedge fund is going to take $2 million off the top of that $10 million and pocket it, as well as the 2% fee that they're now charging you.
The management fee,
$100+ million, right, as a fee. So, and then 1 in 10 is the same, 1% management fee, and then a 10% fee associated with profits for that year. Now, most hedge funds are set up in a way that if they don't create meaningful returns for you, they don't get paid anything.
Yeah.
In fact, they will waive their management fee for the year as well. So, hedge funds are set up in a way that they're supposed to create returns that are outside the bell curve of the not traditional, but the S&P 500. That's the index that they're judged by. While at the same time, again, you was refer back to like Grayscale's two biggest products, GBTC and ETH. You have 1.5 and 2.5% fees on it. It's unprecedented. It's unprecedented. And there will people that will make the claim, well, you know what, it's actually kind of smart because even if they hang on to half of their assets or even a third of their assets, at that fee, they're generating a ton of revenue. But to what end, right?
Yeah.
To what end? Are these guys trying to be, positive actors in the space and, actually bring on new customers? That's the way they act from a marketing standpoint. You can go back to, a week or so or a little bit after the ETH ETF launch, and they kept talking about, well, we're releasing the ETH mini, ETF. And at the same time, that's when we'll turn on our Bitcoin mini ETF. And Grayscale spent a lot of money in PR, had a lot of conversations with, let's call it, journalistic entities to spread that particular narrative, because those mini ETFs, have 15, 20 basis point fees associated with them. That's what they wanted everybody to focus on. And I said at the time, this is a PR campaign. It's a waste of your time. Yeah. Neither of these ETFs will have meaningful inflows for years. They're not going to make any impact whatsoever. And what Grayscale was hoping is that your average person would be like, oh, wow, the Grayscale's doing a good job. They brought their fees way down. And that you'd not notice that the gargantuan products that they have that dominate the initial narratives with both these products had massive fees. And so that's, if you're an ETH guy or an Ethereum guy or an Ether guy, however you decide, you should not be happy with those guys. They've caused real problems. There's halfway decent flows if you take out Grayscale's ETH product.
But you can't take it out.
Yeah, you can't. You can't take it out. That's not the way it's going to be reported on Bloomberg. That's not the way it's going to be reported on CNBC. That's not the way it's going to be reported when somebody is sitting down at a quarterly review for their portfolio and making a decision on, should we get into this product? Well, nobody else is getting into it. There's negative flows for the last 90 days. I don't want any part of that. That changes, right? So yeah, you're right. That's you can't report it that way.
But before we move on to the OpenSea thing, we got a question here from Fibaswani, and he was asking, he says, I got this question and would love your input. How will the introduction of options trading for Bitcoin ETFs, something we've talked about quite a bit, impact market volatility and investor behavior in the crypto space?
I'll answer it, as shortly as I possibly can. It's a little bit complicated about trying to keep it uncomplicated. Options have expiration dates, right? So you're going to get potentially increased volatility at those expiration dates. But until you get up to those expiration dates, you'll actually have potentially reduced volatility because of the liquidity that it's providing the markets. You've seen a reduction in liquidity overall since the Bitcoin ETFs have come about. Again, we live in a bubble, so a $3,000 or $5,000 move, everybody wants to scream about. But you know, I just remind you, when we were at the top in 2021, 90 days later, we were 55% lower. We have not approached that at all since the top, several months ago. So, while it will potentially, maybe short term introduce small amounts of additional volatility associated with options expiration. So there's a thing in traditional markets where there's, again, huge option markets there. And, on any given month, you'll hear somebody on CNBC that's on the floor talk about, well, this Friday is triple witching Friday.
Yeah.
That has to do with options expirations. A couple times a year, there's quadruple witching, expiration dates. And so it's expected that on those days, because there's rebalancing of options portfolios, adjustments to how people are allocated there, that there's going to be potentially increased movement on that day. But other than that day, the options liquidity kind of, more so reduces volatility in the aggregate as opposed to, in the immediate.
Yeah, exactly. Great explanation. As Swivel says, I know it's not an easy answer, but he appreciates it.
Sure.
And so for those of you that are interested in this, what's going on with NASDAQ here with this, petitioning, basically applying for this options thing, I believe it's around the 23rd or 27th or something like that of 21st. 21st is the deadline for the SEC to make the decision on that. James Seyffert seems to believe that likely approval and they'll get going in Q4 of this year. So, we're generally looking at Q4. I mean, historically, Bitcoin, Q4, you get in October, November, December, really starts pumping. And so, it would align with that, get it in there, and create maybe, as those option dates come up, maybe a little bit more volatility around those times. But launching with it, again, makes a lot of sense. There was a lot of back in, I think you probably remember, back in 2017 when the CME futures came out, and everybody's like, oh yeah, that's why price dropped from 19,000, the all-time high then. And they're going, okay, yeah, well, options company is going to do the same thing. And the reality of it is, no, we had basically ridiculousness for a full quarter there. I believe it was September of 2017. We had pulled back to something like $3,000. No, what was it? Yeah, I think we'd pulled back something like from $5,000 down to like $3,000 or something. And in just a few months, halfway into December, we were almost hitting $20,000.
Yeah, there was if you were around then, and I was, there was a 2-week period where Bitcoin basically went from about 9,000 to almost 20,000. It was up.
It was crazy.
5, 10, 50% every day, right? You want to talk about the ultimate pump. That period, you were like, holy smokes, like, the financial news channels. I mean, that's when Bitcoin really took off in those particular spaces, because it couldn't be ignored anymore, because it was going nuts. And again, to be fair, it went nuts the opposite way. In the following year, right? But being in that specific tornado, it was wild to watch. I had been at a Bitcoin / crypto hedge fund event earlier in the year, and I was just sniffing around the space, had dabbled 15, 16, and was thinking, all right, I'm kind of going to go all in here. And I remember being at that crypto hedge fund event in San Francisco, and I was struck very quickly by the triumvirate of smart people in the room. It was software engineers, it was finance guys, and then it was, for all intents and purposes, mathematicians, right? Yeah. And so the collection of engineering interests, the collection of financial interests, the collection of just code, math type of interest, those getting those types of folks together in one room was really compelling. And I thought, holy smokes, something's going on here. Something is going on here. Now, to be fair, like the last third of that particular event, there were some weird panels about, like life extension and cryo freezing yourself. And I'm like, well, I guess we are in San Francisco, so that is what it is. But for all intents and purposes, it was a kind of an aha moment that, okay, this thing's here to stay, because there's a lot of smart people here in this room. That hasn't changed, and those smart people have just turned into folks with more and more influence and, frankly, more and more capital available to them. And so we're in a good spot. We're in a good spot.
I agree. So yeah, moving on here. Let's talk about OpenSea, man. So OpenSea let us know via Twitter, because that's awesome. That's where everybody does it, right? That they received a Wells notice from the SEC. Those that don't know, a Wells notice says, hey, listen, we did an investigation. Here are our findings. You appear to have violated the law, and we've likely, going to take you to court now. We're going to charge you with something. And Jake Traversky, let me see if I can find his tweet here. He tweeted just a couple hours ago. He says, anybody that's in the space, I think, knows who he is. He's a lawyer. He says the SEC has fully lost the plot. The idea that a financial markets regulator established in the 1930s would have jurisdiction over digital art in the 2020s defies not only common sense, but also the SEC's statutory authority. For their part, OpenSea says, we're shocked the SEC would make such a sweeping move against creators and artists, but we're ready to stand up and fight. Cryptocurrencies have long been in the crosshairs of the SEC, and companies like Coinbase, Uniswap, Robinhood, Kraken, and Coin Consensus have been fighting against the SEC's single-track approach of regulation enforcement. But this is a move into uncharted territory. By targeting NFTs, the SEC would stifle innovation on even a broader scale. Hundreds of thousands of online artists and creatives are at risk, and many do not have the resources to defend themselves. By the way, that's a really important point there, guys. OpenSea believes that NFTs are fundamentally creative goods, art, collectibles, video game items, domain names, event tickets, and more. We should not regulate digital art in the same way we regulate collateralized debt obligations. So basically says, in addition to standing our own ground, we're pledging $5 million to help cover legal fees for NFT creators and devs that receive a Wells notice. Every creator, big or small, should be able to innovate without fear. I hope the SEC will come to its senses sooner rather than later, and that they'll listen with an open mind. Until then, we stand up and fight for our industry.
So from the SEC standpoint, what makes an NFT card of any kind different than a physical baseball card? Intrinsic value on both sides, created by the market in whatever way that the market demands, right? Like, why is a certain baseball card or a triple I haven't kept up on the trading card world, but I know that there's
I think it's still Pokemon cards. I think still.
Yeah, Pokemon cards, but there's LeBron special cards that are got weird shiny things and maybe a little piece of his jersey in the card, right? So those cards are worth $50,000, $170,000, whatever, right? That pricing is just based on supply and demand and who's willing to pay for it. No different than digital cards and NFTs that are worth something because two parties are willing to pay and sell, buy and sell. it is truly a remarkable affront and war on crypto, and the very idea that there was any sort of pivot associated with the current regime and how they view crypto and the ability to attack.
Yeah.
That is all set aside. I mean, just all set aside.
Just like that.
Anybody that is trying to think now, that is a user of crypto, a founder, a builder, crypto adjacent, even in any way, and for some reason it doesn't resonate with you that one party here wants to litigate the industry out of existence, other than the Bitcoin and Ethereum ETFs that they approved, which, by the way, when you purchase any of those and you go to sell those shares, you don't get Bitcoin or Ethereum; they give you cash, right?
Equivalent, yeah.
And so litigation, enforcement by litigation, and basically that type of litigation is working to put you out of business.
Yeah.
And then on top of that, you have a Democratic operative on CNBC today, literally getting on CNBC with Joe Kernan and Becky Quick and advocating for unrealized capital gains policy, not trying to explain it away, not trying to, well, it's not really what we mean. It's potentially, in the future associated with hedge funds or whatever, but literally advocating that this makes sense because we actually already have an unrealized capital gain system based on the taxes you pay for the house that you own. Like, they're doubling down on this stuff.
Yeah.
Like doubling down on whatever you own, you don't really own. We want as much of it as we can get away with taking.
Yeah.
So I don't know if you're economically minded, how in the world you would cast a vote for that side of the aisle. It doesn't make any sense to me at all.
Yeah.
They're not even in a reasonable way attempting to hide it. They are out there advocating for these policies and continuing to harass and litigate, in the crypto space. It's not even slowed down. Not even slowed down.
Yeah, and it is crazy. And and here's the thing: a lot of people, I think, what it is maybe to some extent is a lot of the people thinking about or pledging, that they're going to vote for that coming in, probably on the lower end of the economic scale, right? And so they think, oh, well, finally, I can get more, right? I can get my hands on more. What they're failing to understand, though, is unless you're probably at the very bottom, you're likely, if not today, tomorrow, going to be the next in, right? Because government, historically, throughout the world, once it grabs power, it doesn't give it back, right? It continues to grab more and more and more. It says, okay, well, these are only going to be effective for this particular person. And then next thing you know, you extend it to the next person and then the next person, right?
A reminder that this country started a revolution based on a 2% T-tax.
Yep.
Okay.
Crazy.
So burn the ships, based on 2% T-tax, not a 2% income tax, not a 2% property tax, T-tax. So now we're at a spot where, you can find some states that don't have state income tax, yada, yada, yada. But when you add it all up between when you pay tax to buy something, when, state tax, when you pass away, you're talking about, capital gains taxes, income taxes, state taxes, local taxes. It's
crazy.
Percent of what you potentially make, probably more, right? So, we started a revolution at 2%, and we've just decided that is what it is. So this is why politicians will do this and say, well, come on, an unrealized capital gains tax is reasonable. I mean, you're already really doing it when you pay property taxes on your house. State that I live in, I just paid 3 different car registration taxes, like last week. And, my mother was asking me something and like, well, we don't pay state tax here. So that's not true. I don't know where you heard that, but we absolutely do pay state tax here. Well, okay, but and then she said something else about a tax. I'm like, no, that's not true either. I'm like, we pay state, local taxes. We paid taxes on these vehicles when we bought them, and we're paying $1,000+ on these vehicles every year just for the privilege to put a sticker on the license plate so we can lawfully drive down the road.
And then when you're driving down the road, you're paying taxes. You're paying, taxes on the gas.
Taxes on the gas, and then there's a toll road that you got to throw $7 to every time you pass through.
Yeah,
it's again, we started with being pissed off about a 2% T tax and started a revolutionary war about it, and here we are.
Right? Yeah, and if we think about that, that revolt against that 2% T tax led to what's arguably become one of the greatest nations in history. Advancement and just superiority and whatnot. And here we go now with this nonsense, right? With this, okay, yeah, it's okay. Let's just keep taxing. Let's just keep taxing. Oh, but we're not as bad as over there, so we can tax more. Or this particular tax is not as bad as taxes in that country, so we can tax more. And people were just sitting there taking it.
Who's to say that let's peel back the onion, so to speak, on OpenSea. Right. So Wells noticed they're going to have to defend it. They're going to have to do all sorts of stuff. OpenSea, Nifty Gateway, and others are potentially sort of busters of other industry leaders that are monopolies. Right.
Yep.
So you have Ticketmaster, which is a ridiculous, absolutely absurd monopoly. When you buy $100 ticket, you pay $274. You pay more in fees to Ticketmaster than you do for the actual ticket.
Yep.
So if at some point a huge artist decides, I'm not going to fool with Ticketmaster anymore, all of my stuff is going to be an NFT, and I'm going to keep 90%, and all the fees associated with Ticketmaster aren't going to exist because I did it via an NFT, and all the cool stuff that I can do with an NFT, you can't do at Ticketmaster. So, the SEC going after a place like that, it's not just one layer deep, right?
Right.
You can bet your rear end that Ticketmaster's got some lobbyists running around in Washington, D.C. saying something about something, right? And so I can't imagine that Ticketmaster's a huge proponent of NFT technology. Doubt it. So there is it's a lot of reasons to own Bitcoin in cold storage,
and reasons increasing every day. Again, just as we thought, Gensler and crew were kind of pulling back a little bit and relaxing a bit. Here they come out there and busting out like the Kool-Aid man, busting through the wall. For those of you that don't know, Google it, YouTube it, whatever. Those of you
my version, our version of the Kool-Aid man. Again, that goes back pretty far. Both of us were probably 10 when that was around. So spin it up to like the 90s, and it's like the Austin Powers movies, and like when Fat Bastard went through the wall, and it's a little bit better reference for the age group here.
They might understand.
So it's hard to fathom. Right, because you and I have been through a bunch of cycles. We've been through a bunch of economic cycles. We've seen the true power of the American economy benefit everyone. Convincing people on the lower end that somehow taking from those that have more to give to them. That's just not how it works. Take a look at half of Hawaii burns down and they give those families $700. Sorry, it's never how that works out. You're not going to take from people that have and give to folks that are less fortunate, and it's all going to go downstream to them. It never does. government will eat up 98% of it before you get your 2%. And that's not the way you want society to work. Opportunity is the thing, and disincentivizing opportunity is a losing battle. It's a bad deal.
Yeah, well said there. Disincentivizing. Yes. I mean, because that's exactly what it comes out to. And, and people have short memories, and, politicians will come in and promise them the world, and then they'll vote for them. And then nothing or very little will happen there. And then, 4 years later, they're coming up for reelection, and they make those promises again. And you go, oh, hey, we're going to do it. We're going to do it again. I don't know. I'm not, I find it hard for me to get involved in politics. It's just, to me, it's so just disheartening all the way around. But man, when I look at this, just everything that's coming out of that side of right now, I mean, I'm not even looking at the people, right? When people are looking like, okay, Trump, they're like, oh, I hate Trump, and that's why I'm going to vote for Kamala or something, right? And I'm looking at going, well, what are the policies? What are they doing? What did they do the last time they were in? What are they potentially going to actually do this time? And I look at, I can look at Kamala and I go, okay, well, she's been vice president for 4 years. And she says, okay, well, we're going to fix everything on day one. What do you mean fix everything? That's been your party. What have you not been doing it? She says, oh, we're going to do this when I get to office. And I'm like, well, why aren't you starting to do something now? I mean, if you really want people to believe you, start putting in that effort right now. So as you're getting up there, they're going, yeah, look, she's actually doing it.
Yeah.
To me, it just seems like a lot of talk, and they're coming in with a lot of, like you said, disincentivizing things out there. And as companies, as creators of companies, you and I, we look at them, we go, well, what kind of, it's not that we need to be incentivized to create, we're creating anyway. But if you're going to make it more and more difficult for us, what reason do we have to?
Well, here's how you can break it down in terms of how does a regulatory body that's aggressively pursuing and creating law almost out of whole cloth and overlaying over industries where it should not apply. Well, how does that affect the quote unquote little guy? Well, who's going to be the first, set of layoffs at OpenSea if this thing drags on? It's going to be people that are making $40,000, $50,000, $60,000 because there's more of them at that organization than folks in management and upper management. Yeah. So that's how it hurts the quote unquote little guy. So yeah, okay. If you want the government to go after the big guys, go after the guys that have a lot of money, again, it's going to trickle down and not benefit the folks that they're telling you that they're trying to benefit. It's just it's not true. It's not how it works. And so it's unfortunate. And the sort of the battle kind of rages on. And this is why we have elections. It was some politician that coined the phrase "elections have consequences." They do. Yep. If you're cool with the regulatory actions of the last 2.5, 3 years, all right, vote for the folks that have been doing it. If you're not, there's a clear other choice, irrespective of name or hairstyle. There's a clear, stark policy difference.
Yeah, and I think it's probably a great place for us to kind of tie it up here. But I think when we look at that, again, you said there's a clear difference. He's come out here and said, listen, this is what we're going to do when it comes to crypto. This is my plan. This is what, this is our intent. And you go to the other side and she hasn't even said it. Her handlers, basically her group has said, well, she's going to do something that's going to help. And I mean, if you're
in nothing, that says nothing. That is literally saying nothing.
If you're in this space, you cannot, I don't know how you can take everything else aside of it. If you're in this space, I think this is a pretty significant part of your future that you're looking forward to, right? You want crypto to grow and to flourish and to be better, and Bitcoin to do well, and to, lead toward all these changes, these positive changes for us, living here. And I don't see how you vote for somebody that doesn't, that's just been very vague. And it wasn't even them that's saying it. It's their group that's saying it. And
well, it doesn't even, again, the saying of it doesn't matter. All you have to do is look at the actions, and the actions are intentionally antagonistic against the industry, intentionally antagonistic. So, yeah, man, it's been a great talk today, and I know we got to wrap up, but appreciate the time, man. I love these. I love these conversations.
Man, these are great. And, of course, we always hope you guys are getting stuff out of it. If there's ever anything you really want us to address, you can drop me, you can drop me a DM, or I'm sure you can drop, Tillman or Andrew a DM and let us know, because this show is about y'all, right?
Yeah.
The three of us, we have a significant, history and involvement in markets and crypto and TradFi and all these things. And so we try to bring all that, what we've learned over, decades of being involved in these markets, and in different areas of the markets, so that you all understand maybe the bigger picture of where Bitcoin is headed, or where it has the potential to go, and what that means for you. So if you ever have any questions about what's going on here or whatever, or even drop it under the video on YouTube. By the way, you can follow us. Be sure you do there on X. The tags are under the video there on YouTube, but you can follow AP_abacus. That's Andrew, or Tillman, Texas OL61 on Twitter there. Also, be sure to check out their company, thearchpublic.com. Is that what it is? Thearchpublic.com?
Yeah, thearchpublic.com. Yeah, we bunch of trades this week that were all positive. Last 5 trades in our flagship product to the tune of plus 21%. No down trades in the last 3 months. So really, unique stuff, and customers love what we do and how we do it. So yeah, come check us out.
So definitely worth checking out, guys. And of course, you can check me out, my company there at Texas West Capital. Also, we've got the liquiditypulsesystem.com. You guys can jump in that. I think we've still got, there's a code LP100 that you can use. I think we've still got a few significant discounts off that. We just launched that a few weeks back. But everything that I do and that they do is to help you guys do better in the markets, and to do so based on the fact that we've been around and doing markets for so long, guys. So nothing that Andrew and Tillman and their company does, or that myself and Texas West Capital does, is, a 2-year, somebody who's been in crypto for 2 years or a year or something, trying to give you their historic insights. We've got tried and tested approaches to markets, guys. So there's a lot to say that. So anyway, we love that y'all keep showing up. Keep letting people know, hit the like, hit the thumbs up, follow the channel, follow us on social media, say hi. We'd love to hear from you guys, as always. Leave a comment. And at the end of the day, guys, remember, if you're in the markets, the only thing you control is how much you lose. That's it. So price, you may think price is going somewhere, and it may not, but the only thing you control is how much you lose. So keep working on that risk management. Andrew, always great to have you here, man. And next week we'll have Tillman with us again. Hopefully, he'll have dried up the tears with the first child going off to college and whatnot. It's a tough thing for parents. It's a big change in life. Yeah. So, all right. We're going to get out of here. Thanks again, man. And we'll see you, man. I guess we'll see you next week, right?
You bet. Have a great week, man.
All right. Take care, everybody. Thanks, Andrew.